So there we go, Greg. I mean, I was reading Standard Bank down over 5%, Woolies down 4.5%, Truworths down 4%, Shoprite down almost 4%. And when you see numbers like that, you wonder what's gone wrong, but they're paying dividends.
Yeah, a lot of those shares ex-dividend today. Standard Bank, I think, is ex-dividend £2.12. Still doesn't mean, you know, the share was down a lot more than its dividend, but I think that although the volume today was a little less at around 11 billion, normally about 15 or 16 billion, but Woolworths also ex-dividend, Shoprite also ex-dividend, so those companies. But of course those retailers also came under a lot of pressure on Friday as well.
Yeah, I mean, what is your view on those spaces? I mean, we have seen the banking sector do particularly well this year, and we know that retail is still trading at high multiples. What is your view on those two sectors and the outlook at the moment?
Well, look, on the retailers, they've done exceptionally well. You know, these shares have increased significantly over the past year. There seems to be some sort of rotation possibly out of retailers and now into resources. You've seen China saying they're going to build 2,000 kilometers of new roads. The Europeans are coming with an unlimited purchase facility for bonds, try and bring interest rates down. And of course on Wednesday, Mr. Bernanke will then let the world know if they're going to engage in a QE3. Those are all very bullish for resources. So if you look at some of the PE multiples for Shoprite and those type of companies, they are pretty high. People have made tremendous profits, so I think they're banking some of that.
Let's talk about some of the retail resources stocks today. Sasol coming out with some earnings, full year earnings. Let's talk about your view firstly on the share price before we delve into the earnings, because the share price bounced today, 383 Rand, almost 384. It was up 2.5%, but it's still trading at a PE that's under 10, and that's pretty much in line with global oil and gas sector players. Are we likely to see an improvement now going forward on the basis of these earnings?
Well, I think so. Look, if you look at Sasol in relation to the emerging market universe, then it's still a little more expensive than its emerging market peers. However, in South African terms, low single digit or 10 PE, it looks very attractive. But I think the thing that the market liked is that Sasol increased its dividends substantially. It looks like that the gas investments are starting to pay off nicely, and of course the price of natural gas has fallen significantly, so if they can produce it quite cheaply, turn it into fuel and sell it at a higher price, then they should make huge amounts of profits going forward. And
then in new energy spaces, the announcement today, Sasol New Energy bought a UK company, Oxis Energy, for £15 million, 195 million Rand. That's a small amount for such a big company, but it really indicates, the strategic positioning for new technologies. Now, this is a company that feeds into electric vehicles, electric scooters, basically making the type of batteries that are needed. Are we going to see more of these type of acquisitions, do you think, from Sasol?
Well, I'm not sure. That obviously where they can look for new technology, they will. As you said, it's a very, very small acquisition for them, but they're always looking to improve on their technology, because it's their technology that originally has given them the edge, converting coal into fuel. But I think the key thing for them is that all their natural gas operations around the world starting to pay off, particularly in Qatar. That's doing well for them. They're going to be building an operation in Louisiana, or they're thinking about it in the US, and that will be almost the size of a Secunda. So big capital expenditure offshore. Doesn't mean they're going to neglect Southern Africa. They've just spent 3 billion putting in a mine shaft of their coal mine in Secunda, and they'll have to cough up quite a lot of money for the Mozambique project. So, but they generate huge, about 25 billion Rand worth of cash. They've got low debt, so they can certainly afford this capex.
And AVI's results, before I let you go, good investment at the moment, given the fact that it has been a strong performer?
Very strong performer. It has risen pretty high. I think they did what's also nice about them, besides the dividend, there's a special dividend, R1.80, which the market liked. But I think it's run very hard. They have warned themselves that margins are under pressure, and you could see increased competition. So if there's increased competition, certainly will affect their margins going forward. However, they have some household name brands that should stand them in good stead. But in the short term, they've been a phenomenal performer, so probably look a little rich at these levels.
Certainly names we all recognise here in South Africa. First, Five Roses, Fresh Pack, Pravita and the likes. Thank you so much for joining us. Greg Katzenellenbogen, Director at Sanlam Private Investments.